Welcome to the Big Four Accounting Firms podcast, brought to you by big4accountingfirms.com. Today's podcast, we're going to discuss E&Y's revenue a little bit more than we did yesterday. Some news publications have caught on to it, Reuters and FT, although we reported it before they did. And the E&Y revenue number is going to be $45.4 billion. And that represents over 10%. It's about 13% increase over the $4 billion in prior year, $40 billion. And then in local currency terms, it was 16.4% growth. And Reuters says that this came up on the call, which we spoke about yesterday, to 312,000 staff globally. And I think it's actually 330,000, but the official revenue report has not come out yet. But I wanted to talk about this and then the breakup a little bit more. But 10% growth for E&Y is humongous. Almost at 50 billion. Seems like they were at 30 billion not too long ago. And this is going to potentially be the last year that they're together. Although the split up, who knows how long it'll actually take. And hopefully people at E&Y get double-digit salary growth for the most part. If not, then that's a shame. And hopefully really good bonuses as well. But that'll be coming, I believe, next week. People will know that. And then also what's good is that the market is still doing okay. So hopefully compensation for Big Four accounts stays good here for at least this year. We'll have to see next year, as there's mixed reports coming out about, companies' earnings. Some of the largest companies in the world are doing really well, while companies sort of in the middle are struggling, and different types of companies are struggling. But you have over 10% revenue growth here, which is tremendous, especially in this environment. But it was an inflationary environment. We know interest rates are now going up, so it's just going to reduce spending overall if interest rates are going up around the world. And so there won't be growth like this next year unless a miracle happens, because you have to remember a lot of this growth and why EY and other Big Four accounting firms, or why EY is splitting up and why the other Big Four accounting firms are doing so well, is because of consulting. Consulting has over 20% growth at EY, while audit is under 10%. I think it was like 8% for EY this year, which is good. But in this environment, if you can't do double-digit growth, then I think we kind of understand why EY is splitting up audit. People are tired of the conflicts that audit brings about, and the growth isn't there. And audit is the backbone of the Big Four accounting firms, but I think people are just getting tired of dealing with the audit firm as part of their firm. And I think what we're about to enter, it's been 20 years since Sarbanes-Oxley. And so I think the firms are just resetting. And I think we're probably, the more I think about this, we're probably just going to end up with the Big Four accounting firms again, starting from scratch as the audit firms. And the consulting firms are just going to become whatever they become. And then those audit firms rebuild. And it just gets regulators off their back. It will allow them to grow a little bit more. But the problem that you have now in the audit business is that there's too much regulation on the audit firms. And it's also like clients are used to pushing back on auditors at this point. They want them to get better at auditing every year. Therefore, they have to reduce their fee and reduce their hours. So the margins get thinner. And I think that's just what the partners are dealing with. And people are still going to want to be auditors. But I mean, people want to be auditors for various reasons. They think they're going to become a finance person, work for a large corporation. But it's just, you're not going to experience the compensation growth that, maybe a consultant does. And I think it's easy at this point with these type of revenues and consulting for the audit firms to want to break up. But I think if we do go into a downturn in the economy, which we're seeing around the world, then I think people are going to value audit a little more. But the other problem is that people are still going to push back on audit. The problem is if you want access to public markets, you have to have an audit firm. So it'll be there when consulting services, you're going to see consulting services next year drop off a cliff. People aren't spending in capital expenditures, or they're reducing it. Now, you'll see a whole bunch of headlines out there about people investing in XYZ, but wait till next year. You're not going to see 20% growth just because of interest rates are not going to allow companies they're not going to do the mergers that they would normally do. They're not going to spend as much money because they can't take out loans as big as they'd like to because they don't want to pay the interest. It's just going to change the environment. And so I think it's going to be a unique time to be at E&Y, especially on the audit side. It's going to be very confusing this time period. But they're doing it after their strongest year ever as a Big Four accounting firm. And I think it's a good time to scale back and reduce exposure to regulators and start from scratch. But it's going to be a very interesting environment. It's also, you also have to think about the internal things at E&Y, or just any Big Four accounting firm, the software, et cetera, and how they're going to split that up and divide that up and continue operations. And it's not a reason not to do this, but it's just going to be a very confusing time period. It's going to be interesting to see how that affects E&Y's delivery to the client. It's going to be interesting. I mean, could just talk about this forever. Just the implications, as we said, that how the partners are going to get paid out. How many people are going to leave the firm? How many people are going to retire? How many people are going to be looking at other jobs because they don't want exposure? Who's going to keep the brand? There's just so many questions that have to be answered. Even if E&Y doesn't end up doing the split, this is going to have a hit to their brand a little bit, just because people are going to be a little bit wary going forward with E&Y when E&Y doesn't even know how they're going to move as an organization. So it's going to be a difficult environment going forward for E&Y, but it's a record year for revenue. It's going to be a great year for compensation. And another thing on the compensation end is that people have the potential to get 2 bonuses this year, theoretically, if the deal goes through, because you'll get your bonus right now after fiscal year 2022. And then if the firm does split up, people will probably get a little bit of change for that, unless you're a partner, and then you probably get a lot of change. But it's going to be a good year to be an employee at E&Y. But after that, there's going to be a lot of questions. And a lot of people are just going to wonder who they're working for, whether it's a SureCo or NewCo, or whether they're going to be called E&Y or something else. And what that new firm is going to be called. But that's the podcast for today. Make sure to subscribe to this podcast to get future updates about the split up, the changing of the Big Four, E&Y's revenue and compensation, etc. Thanks for listening.